Welcome to this QuickBooks Desktop Accounts Receivable Tutorial 2021, Understanding Accounts Receivable in QuickBooks Desktop. My name is Matt Hultquist with the QuickBooks University, and welcome back for another video on how to use QuickBooks. Before we get started, a couple things. Hey, head over to the QuickBooks University at qbuniversity.org. Got a lot of great stuff over there to help you avoid making some of the most common mistakes in QuickBooks. Also, like this video. Share it, like it, and also subscribe to my channels as I come out with videos every single week. All right, so let's talk about accounts receivable in QuickBooks. First thing you got to understand is what accounts receivable is. Accounts receivable is if you invoice a customer and you expect them to pay at a later date. That is an invoice, and that creates what's called accounts receivable. It just means you have customers that owe you money, and you got to track that somehow on your financial statements. An accounts receivable is the account that this goes into. So whenever you do an invoice, it increases accounts receivable. So we're going to walk through some of that process in this video. So first of all, here we are at the home screen, and we're going to, take an example. Let's say that you just did some work for somebody and you have to bill them. You have to send them an invoice. The first thing you're going to do is you're going to go here and you're going to say create invoices. Okay, pretty straightforward. Brings up the form, brings up the invoice form. You're going to select your customer. Now this is a sample file, so we'll see there's already names, there's already different jobs in here. So we got this utility shed. We're going to skip the class, and we are going to say that we are charging for blueprints. Okay, so we did some blueprints for this customer, Jeanette Mameo, and we need to bill her for this. So we're going to say one set of blueprints, and we're going to say that it was $1,000. Okay, so when I click Save and Close or Save and New, it's going to save this as an invoice that Jeanette Mameo owes the company. This will in turn increase accounts receivable, meaning that she owes us this money. Okay, so we're going to click just Save and Close, and it's going to ask, it's saying you don't have a class, and we're going to hit Save anyway. So now that's all we had to do. We created this invoice. You can email that invoice, you can mail that invoice, you can send it multiple ways to the customer so that they get it and can pay it. Now, the next part of this is when they pay this invoice, how do you record this? Well, let's take an example that they send you a check, or they could send you a credit card number and you charge it, whatever the case may be, but they send you some form of payment. So this is where a lot of people mess up when they are dealing with accounts receivable in QuickBooks, is they will just go to customers make deposits, or they'll go to the register, they'll record the payment, but you have to go offset that invoice because it increased accounts receivable when we sent that invoice, and now we have to reduce accounts receivable to show that it was paid. And we definitely think that the customer wants to show it as paid, so you don't send them past due statements. All right, so what you're going to do then is you can literally just follow this flow chart on the home screen here and say receive payments. All right, so it brings up the customer payment screen, and we're going to say, let's see if I can type in her name, Jeanette Mameo, and utility shed, and we're going to see this is the accounts receivable, the invoice that we sent. Okay, so we're going to say that she paid $1,000. Date 12/15/2023. It's going to default to the current date. We'll say that it's 8547, the check number. Now you'll see this here. This checks it off because it automatically applies it. You can uncheck this if you have multiple invoices and a payment is for a different invoice. Uncheck this one, put it to another one. If they make a partial payment, let's say that they only paid $500. Okay, we still apply it to this, but you'll see that the payment's $500 and it'll keep $500 in your books as accounts receivable. Okay, so very, very important. If they don't make the full payment, you can put in the lesser amount and it'll keep track of it. If they're paying multiple invoices, you can check off and you can allocate. If you need to change this over here to whatever amount it needs to be, you definitely can do that. It's very, very flexible. All right, so let's say $1,000. So she makes this payment, we'll say it's a check. That's okay, and we're going to hit Save and Close. Now here's where people get hung up quite a bit, and this is where I see the most common mistake made when receiving payments, is in QuickBooks, you basically will set a default account of where you want this to go. All right, you can or you can't. I'm going to show you where that is in just a second. All right, now in this case, and this is how most people have their QuickBooks set up, this goes to an account called Undeposited Funds. And basically what that means is you received the payment, but you have not yet taken it to the bank. Now, that's important because if you, let's say that you only go to the bank once a week and you accept payments all week, in QuickBooks, if you put them to the checking account, that account is going to be inflated. You're going to think you have more money than you actually do. Okay, so in this case, it goes to undeposited funds. And then when you go to the bank, we'll go to banking and make deposits. Okay, it's going to bring up the payments that you've received but have not yet taken to the bank. It's kind of a safety feature to make sure you don't overstate your checking account in QuickBooks. But a lot of people just don't like this because it's very confusing. But in this case, it's set up to say, go to undeposited funds. So let's say we go to the bank and we're taking our $1,000 deposit. So you just check off that deposit, click OK. It's going to show up in the deposit screen. And then we say save and close. And voila, it gets moved from undeposited funds to the checking account. Okay, now, if you want to change this setup, what you want to do is you want to go to Edit, and you want to go to Preferences, and you're going to go down to Payments right here and go over to Company Preferences. You'll see here it says Use Undeposited Funds as a default deposit to account. Okay, if you uncheck this, it will not automatically go to undeposited funds. Okay, so we close all the windows to affect this change. Let me just show you a quick example of what this will look like if we receive a payment from a customer. Let's say receive payments. And let me expand this out and we're going to we'll go down to Doug Jacobson Kitchen and we'll see here that he owes $2,320. So if we say 2320, we get that payment. And you'll see now it has the option. So if you uncheck default to undeposited funds, you have the option of what account you want to put it to. So if we say we're putting it straight to checking, we'll say save and close, and it goes to the checking account. All right, let me go back to the home screen here. Any questions, any comments, please feel free to leave those below. Happy to answer very short questions in these videos. Also, head over to the QuickBooks University. That website again is qbuniversity.org.